shining at this point in time with a 0.5% uptick. The Nifty at 7,900 and the Sensex inches away from 26,000. Fine place to be in as we head towards the new year. The Bank Nifty as well. At the moment a slight underperformer compared to the Nifty, but it was leading the way up until a few minutes back. But the Bank Nifty for the year has not been a sterling performer at all. There's only one stock which actually has given fairly decent gains in the Bank Nifty, in the banking space, and that is IDBI Bank. So let's hear it from IDBI Bank. Mr. Kishore Kharat, the Managing Director and CEO at IDBI Bank, joins us on the show. Good morning, Mr. Kharat. Thank you very much for joining us. Well, first up, the Finance Minister has made public several times that he's looking at a different structure for IDBI. Is there any move at all, any discussion that you have had with the Finance Ministry on the future course of action?
Let me tell you, actually this is, government has been speaking about this. Right from the Gyan Sangam, they said that in all banks they would like to reduce the holding up to rather whatever level, but they would like to bring it down to 52. IDBI Bank, of course, was the first one which they started discussing about it. But on at a formal level, if you ask me, there are no discussions so far taken place that it should be brought down. But I believe that in any case, because today IDBI Bank's holding, if you see, it's close to 91% government, direct plus indirect. Now, from that level, if the government wants to bring it down to almost 52, which they have expressed it very clearly, so there is a lot of headroom for the IDBI Bank, and particularly they know economic value of this bank for the nation, and perhaps that is the reason they would like to strengthen IDBI Bank, and the move is only to give more freedom, I will say more operational autonomy to the bank by reducing the holdings.
No, that's true, Mr. Kharat. The intent is known, but the timeline, there's no clarity on that. So, there were reports suggesting that IFC would pick up about 15% stake in IDBI Bank, and that deal would close by the end of December. We're already at the end of December, and there's no sign of that deal just yet. Any clarity there?
No, in fact, at bank level, there is no proposal directly received from IFC or anybody. But if you see, our shareholders have given us a mandate of raising 3,000 crore rupees. Out of that, 2,771 crore has been actually given by Government of India, the fresh allocation. The remaining, obviously, will have to go for the QIP. And if, whenever we are coming out for the QIP, for the equity raising of the remaining balance of 6,000 rupees, there is room for institutions like IFC. I don't say there is no reason for them to jump in, because IDBI Bank, as I said, the strengths are good in the bank. So multilateral institutes like IFC, if they are showing interest, it's a good for the bank, and it shows the credibility and potential of further development in the bank.
Could you just, once again tell us what is the direct and indirect holding of the government?
Direct at present is 76.5%, plus indirect, let us say with the LIC around 9%. So it goes to almost 85.5%. And another 2,991 crores has been actually given by the Government of India. That adds to another 4%, you can say.
Okay.
So it's crossing 90% direct indirect.
Okay. So there's a long way to go before even 52% is reached. To speak about minority government holding is a long way off. What's the, were you in discussion, or have you been in discussion in terms of better housekeeping? We heard a lot about IDBI probably selling off any of its bad loans. What are your plans with respect to handling the NPLs? No,
if you look at my loan book, and if you look at particularly my stressed asset portfolio, most of it is actually coming from the infrastructure segment, and it is due to the regulatory prescriptions. Actually they are looking at NPL or stress assets, but if you look at the ground level realities, these assets are very well performing assets. There are only a cash flow issue, because top lines are not actually they are not getting top lines as expected. So the cash flows are less, and therefore there is a stress. But these all assets on the ground are performing assets, in my opinion. only because of the regulatory prescriptions, we have to treat them differently. We have to treat them as a stress assets. So far as IDBI is concerned, our all assets are very big assets. Housekeeping wise, if you ask me, there is very little room for me to sell it to ARC because, as I said, these are all performing assets. The moment the economy turns up, the moment cash flow improves, all these assets are going to pay me back. And therefore, very few accounts, very small accounts, perhaps we may be in a position to give it to ARCs. But otherwise, most of the accounts, we are quite hopeful that they will turn around.
Are you already talking to the ARC? Are you going to sell anything shortly?
ARCs, yes, we keep on talking to ARCs, but as I said, those are only for those small accounts. But the question comes only about the pricing. We would not like to give to ARCs only for cleaning up my books at a very throwaway price.
Okay.
If pricing is actually adequate or good enough, we don't mind selling it. We have in fact targeted few of the accounts for that. Let's say up to 300, 400 crores accounts we have already identified for downloading to downselling to ARCs.
Okay, your GNPA last count was 6.92%. If you add restructured, what will it come to?
If we add restructure, then it comes to close to 14%.
Okay.
Okay. I'll come to the gross NPAs in just a bit. I have a follow-up question there as well. But before that, it's quite disappointing, Mr. Kharat, to know that you have neither received a proposal from IFC with respect to a stake buy, and neither have you heard from the government in terms of reducing stake, because that was the main reason why the stock has been going up in the last couple of months as well. Is it safe to assume that there will be no deal by the end of the fiscal, because there are only 3 months left?
No, we cannot come to the conclusion that there won't be any deal. As we say, we are also actually seeing in the newspapers, the government is actually, going to bring down it to 52%. And if, as I said, the QIP, which I am going to raise for almost 3,700 plus crores, obviously that will be a good route for IFCs. So we cannot say that IFC will not come in. And as you say, from 90% to 52%, almost there is a 38% room. IFC, what I read from the newspaper, they want to take, let us say, up to 15 to 20%. So they can actually get a good opportunity to come in the IDBI.
Okay, fair enough. So you don't have any clarity on when this will come through, but you're hopeful that something will come through soon. Give us some clarity then on the books of IDBI Bank, because as my colleague was pointing out, the asset quality still continues to be stretched. You're sitting at almost 7% gross NPAs last quarter, and your slippages as well are at almost 3,000 crores in the first half of FY16. By the end of the fiscal, where will your slippages be, if you can give us some ballpark estimates? And also on gross NPAs, what are you forecasting?
See, quarter on quarter basis, actually my non-performing assets are reducing. The new additions are actually reducing, and therefore we were thinking that it is going to taper down insofar as reductions are concerned. It will not be much another, let's say 1,500 to 1,600 in both quarters put together. That September and last Q4 we are expecting. But then there are certain prescriptions, regulatory prescriptions coming from the regulator, under which suppose if we get certain directives of downgrading certain accounts, then perhaps the position might be different. We are still at discussion stage with the Reserve Bank of India, and few accounts we need to really take a call once the Reserve Bank of India agrees on whatever we are discussing.
Actually, yeah, that was the discussion I was interested in, Mr. Kharat. The Reserve Bank governor has been openly propagating that he wants banks to recognize and provide. And the deadline he has set for the industry itself is March 2017. Should we expect from IDBI and from the banking sector in general greater recognition of NPA and bigger provisioning in this quarter, the third quarter, when the numbers come out?
In fact, if you ask me, yes, we would like to go through that exercise only because of strengthening of our balance sheet.
Yes, of course.
As very well clearly indicated by our governor, Mr. Rajan, we are actually already started working on this. How do we really clean our balance sheet also and reduce the stress on the balance sheet? We may have to bite the bullet one time, either this quarter or the next quarter. But once we do that, perhaps there will be then room for improvement in our balance sheet, and particularly when IDBI Bank is trying to change the composition of its equity by going through QIP and all, we may have to take our investors also in confidence and show them that yes, bank is actually working towards improvement in the balance sheet. So as per the directives from the governor, we will certainly work on improving it, and if required, certain accounts are to be downgraded, we will downgrade. In fact, our provisions are quite high, more than the industry level. We are close to 70% PCR ratio,
Yep.
which is one of the best in the industry as on date today.
Okay.
What remains is hardly 30%, and that if it is required, we will provide certainly for that.
So you're looking at a one-time biting of the bullet, not dividing it over 6 quarters.
Yes. No, one time in the sense, see,
Because
this has to
the
be done
governor's
before this.
deadline is April 2017. So some banks would choose to perhaps...
yes, April
you're
2000
looking at a one shot.
No, because originally when discussions had started, the governor was saying that it will be March 17. But in the recent discussions, whatever we have been actually discussing with the team of RBI, the indications are that it should be done by March 16 itself.
Okay.
So this quarter we'll have to do few accounts, next quarter we'll have to do few accounts. Perhaps that will be, therefore I am saying, one time we will have to bite the bullet so that at least next fiscal, when economy is improving, we will certainly bounce back.
Okay, so it is March 2016 deadline that RBI is talking to you, not March 2017.
No, March 2016.
All
This
right.
is what is the recent discussions
All
we
right.
have been.
All right, that's new. Thank you very much, Mr. Kharat, for joining us with those details. Now, this is a very, very important revelation. The governor clearly said, I'm giving myself March 2017 as a deadline. So one thought that the bad loans would be spread out over at least 4 or 5 quarters. But if it has been advanced to March 2016, then you should expect that the third quarter numbers, when they come, are going to see some severe scars. Maybe you will say that the market is prepared for it, because we all know that 15% perhaps of the book is stressed. But it's going to come out in the form of higher provisioning and come out in the form of higher slippages.
But that's
and
in a way
NPLs.
better, right? In one shot,
No, it's better,
the
but
pain will be out of the
EPS has to
system.
be adjusted. I don't know if the EPSs and PEs of banks have adjusted to that reality just yet. So that's a very important indication. And I think what you pointed out was equally important. If the government is sitting with 80% stake in IDBI, it doesn't look like it's an FY16 measure to bring it down below 50%. It's a long way off. And IFC takes maximum 5% in a company. It doesn't take, 40% in any Indian bank. And they have stakes in all the small finance banks that have got licenses. AU Financiers, Ujjivan, all of them also have IFC stakes. So how much can IFC